Lendlease is selling an $850 million shopping centre. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I hope you're having a good Saturday. It's very hot here in Brisbane, so you might hear the fan in the background, and my shine of coffee is a chilled coffee at the moment. I thought we'd start the weekend by having a look at this article from real estate or commercialrealestate.com.au that was sent to me by a viewer. It's detailing Lendlease's plan to sell or attempt to sell $850 million of its shopping centre assets. What we're starting to see here is more and more institutional and big name organisations and investors leaving the retail sector. Yesterday we talked about Kaufland, or the day before. They've already invested $500 million in Australia, and they didn't fall for the sunk cost fallacy and abandon the market. We're already seeing Stocklands, who had sold off $500 million worth of their retail centre assets and were planning to sell another $500 million. The question I put to everyone is, how is this going to affect our super funds? What is this telling us about business confidence for the Australian economy in 2020? Remember, 10% of our workforce is in the retail sector. That's a big chunk. That's a big chunk. We also have, we looked at the unemployment data that's changed, and we've also seen, or I'll do that in a video following up, we've also seen this string of retail collapses starting this year. One after another after another. What's that going to do to January's unemployment data? And how's that going to affect the share price and asset price of some of these organizations? Perhaps this is a foretelling or foreshadowing. Let's wait and see. So let's dive in. Lendlease to sell $850 million shopping centre asset. Lendlease's investment arm will recoup as much as $850 million from the sale of one of its largest shopping centre assets, taking it a step closer to satisfying as much as $2 billion in redemption requests from its unlisted fund as some investors weigh up their exposure to the retail sector. The Lendlease managed Australian Prime Property Fund, APPF, retail appointed agents this week to sell its 50% stake of Brisbane's Westfield Carindale, which the fund co-owns with the Centre Group managed Carindale Property Trust. So we can see here this $2 billion request from unlisted funds and investors. That's the smart money. The smart money, the big money, the institutional money is pulling out of this sector, guys. They're getting out of this sector. So, APPF's retail stake in the $1.7 billion Carindale Centre is one of the biggest assets in the 10 property portfolio. Also in the portfolio are stakes in Lakeside, Joondalup, one of the biggest malls in Western Australia, Sunshine Plaza and Maroochydore on the Sunshine Coast, and MacArthur Square in Sydney. We've actually designed a nice little Lorna Jane at MacArthur Square in Sydney. There you go. You got to go visit, get a photo taken. Westfield Carindale has the second highest sales of all shopping centres in Brisbane, with annual retail sales of $896.3 million. The planned divestment comes amid intense interest on values in a sector that has come under pressure from weaker consumer sentiment and the structural challenge of e-commerce, and has caused some investors to reweight their portfolios. And I'll just bring up that data there. We can see consumer confidence, guys, is certainly trending down. I'd also argue that, the terrible wage growth that we have had, and coupled with the increase in property prices requiring less ability for people to use discretionary spending on property, on consumer goods, more money put aside to try and get a foothold in property, it's going to all affect this sector. If the half stake of Westfield Carindale sells in line with the shopping centre's most recent book value of $1.7 billion, on top of the $670 million recouped from November's Westfield Marion sale in Adelaide, Lendlease would be able to repay about $1.52 billion to its investors, and close in on meeting its total redemption requirements. It's understood that most of the requests are among the fund's 60-odd institutional investors. There you go. They want to reduce their exposure rather than exit entirely from the fund. The trust has 2 years to satisfy redemption requests, and that window closes towards the end of this year. So we're seeing how, well, the institutional money wants to reduce their exposure to the retail sector. We're seeing, well, the effect of the collapse of a series of smaller retail chains and medium to bigger retail chains all across Australia, and how that is flowing through to the large assets of these landlords. Asked to confirm the planned sale, a Lendlease spokesman said the fund did not comment on market speculation. The sale will be very keenly observed by market pundits, still trying to ascertain where the valuations of major malls sit with the current market, after the Westfield Marion site sold at a discount of more than 9% of the property's book value. So, don't worry guys, put it all into top quartile housing. That's always going up. Housing always goes up. 9% cut, guys. 9% shave. How much of our super is invested in those? Those involved in the Westfield Marion deal said it underscored how offshore investors remained attracted to fortress-style retail assets, but analysts said it showed buyers for such large malls were scarce. They predicted retail property values would decline over 2020. Also keenly observed was AMP's capital divestment of a half stake in Garden City, one of Perth's largest malls, to reduce asset concentration and provide further diversification for investors of its diversified property fund. The assets were bought by Scentre Group for $570 million, which even with the inclusion of the management and development rights represents about a 6% discount on the mall's last officially recorded book value of $1.2 billion for the entire asset. So there we have it, guys. We're seeing two examples of large footprint malls sold at a discounted rate, one 9%, one 6%. We've got large institutional investors trying to reduce their exposure to the retail sector. We have business confidence and consumer confidence down. Unemployment, while it is trending down, guys, we also need to remember job advertisements have gone down. And then if we compare it to the other data, which we'll compare our unemployment rate from the ABS to the Roy Morgan unemployment has actually gone up. So we're seeing conflicting data resulting from different methodologies. We have wage growth. That's been terrible. And GDP growth that is going down. If we look at it from a per capita basis, GDP growth, we're actually in a recession, guys. Since the GFC, Australia's economy and GDP has been depressed. We've been growing below trend for the majority of time since 2008. It's only the fact that we have immigration coming in such large numbers that has helped prop up our gross domestic product growth. But the problem is, we need infrastructure to keep up with that. If we don't, well, just look at our water supplies, guys. The solution, everyone seems to think, is just paving over more and more roads. So how will this filter through to the stock market? How will this filter through to other investments? How will this affect housing? Will we start to see more institutional money move out of this? Where will it go? Will it go into other commodities? Will it go into other stocks? Will it inflate the stock market even more? Will we start to see what's happening in the US, where it just keeps going up and up and up? And what will happen if consumer confidence goes down, or we've got a drastic shock, or the cash rate gets cut again, which is already at insanely low rates? We'll have to see. We'll have to see. Anyway, guys, let me know your thoughts and opinions. Please like, share, and subscribe to the channel. If you'd like to support us that little bit extra, we have a Patreon where you can make a small monthly donation. We also have the ability for you to join the channel here on YouTube, where you can access to emojis and badges. We have affiliate links with Independent Reserve for your crypto trading, Amazon and eBay for your consumer purchases. We've got our own merch made at the HeiseSays website, and finally PayPal if you want to contribute that way. Thank you all, everyone who's helped support the channel. I've just recently purchased a new action camera, and please let me know if you have any suggestions of retail areas around Brisbane where you think it'd be worth doing a walk by and just seeing how it's going. Take care everyone, have a great day, and I will talk to you all later. Bye for now.